If you are a homeowner who is in need of a new car, but you don't want that new car payment, in this video, I'm going to share with you how I bought a $30,000 vehicle and it only cost me $100 a month. Stay tuned. As I mentioned, if you are a homeowner and you're willing to think just a little bit differently about how you buy a car, then this video is for you. Let me tell you the problem first. The problem is that most Americans, most people today, have paymented themselves into a corner. Meaning with all of the payments they've acquired, their house payment, their car payment, student loans, credit cards, all of the monthly subscriptions, they've basically paymented themselves into this very small corner where there's not a lot of discretionary income for them to blast away debt, build wealth, create freedom for themselves. This strategy I'm about to share with you has allowed myself and my wife, my family, to not only control our income and expenses, but leverage all of that extra discretionary income to do all the things I just mentioned, pay down debt, build wealth, and ultimately create a more solid and robust financial future for ourselves. Let me tell you where we're at today. As a society, we've been indoctrinated by the banker's business model. And the banker's business model is this. We need to borrow money to buy things like cars and homes and college. The bankers tell us, here's how much you can have, here's the interest rate that you'll pay, and here's how much your payment is going to be month after month. And then we dutifully go out and pay those payments month after month after month. As our lifestyle increases, so do our payments. We buy bigger homes, therefore a bigger payment. We buy a nicer car, therefore a bigger payment. And this was happening in my family until I discovered one small trick, and it is this. Once I had a significant amount of equity in my home, mainly coming from a large down payment on the property when I bought it, I ended up taking out a home equity line of credit. That home equity line of credit, for me personally, was meant to be more like an emergency fund. If I needed it, it was there in case of that emergency. But over time, I realized that that HELOC, that home equity line of credit, actually had a lot of use. And so I started leveraging that home equity line of credit a bit like a checking account. Now, I'll get into more of that in the backside of this video and also at theshredmethod.com. But first, while you're here, my wife's transmission was going out on her van, and we decided that instead of plunking down thousands of dollars on a new transmission, that it was time really just to go shopping for a new vehicle. She picked out a van that she liked. It was around $30,000, and we quickly did the math. Now on a $30,000 vehicle, even on a 5-year note at 2%, the payment ends up being around $526. Now, we are not ones to carry a long, laborious car note, so we started pricing out what would it cost on a 3-year car loan. Well, a 3-year car loan on $30,000 creates an $860 monthly payment. That's a lot of money. And in fact, what most people would do today is they would go out and they would shop for a car, and they shop based on what they can afford on a per monthly payment basis. Well, we wanted to do it a little bit differently. We still wanted that $30,000 vehicle, but I wanted to keep the payment around $100. Here's how we did that. $30,000 put on a home equity line of credit at 4% simple interest translates to about $1,200 a year in interest. You divide that by 12, you get $100 a month as a payment for your car loan. Now, for those of you who are saying, yes, but you're simply rolling your debt into the equity of your home, you're both correct, and there's a method to my madness. You see, the extra $760 in monthly cash flow that we saved by not doing a 3-year car note goes into something called the shred method, where all of that income, that discretionary income, goes back into the home equity line of credit on a monthly basis. And every single month, the balance on that HELOC goes down, 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 down. In effect, what happens is we blast away the car note in record time. It doesn't take 3 years. More often than not, we can get that done somewhere between 12 and 18 months, depending again on our discretionary income. The challenge here for most people is that they don't have a lot of discretionary income because of the fact that they have so many payments that are so high. Common wisdom says, oh, you shouldn't hold a very long car note, so let's make it 3 years or 4 years. And when we do that, we create this very large financial obligation every single month. Same thing with a home. Conventional wisdom says, don't do a 30-year, take out a 15-year note or a 10-year note. And what we do is we increase the monthly payment to a level where there's not a lot of discretionary income. And again, the problem that creates is if there is some sort of an event, could be an economic event, it could be a job loss, it could be an illness, it could be unforeseen expenses. If we don't have a lot of discretionary income and we don't have that big emergency fund sitting on the sidelines, then we could be sunk. And there are statistics out there that say that the majority of Americans are about $400 away, a $400 emergency away from financial catastrophe. What we do using this method is we create greater spreads between our income and our expenses. And that discretionary income we put to work creating efficiency using the shred method. Now, I will tell you this, and this is a big, bold disclaimer right here. The disclaimer is, this is not for everyone. If you are someone who is trying to free up discretionary income so that you can spend money, so that you can take vacations, so that you can go out to eat a ton with your family, this is not for you. This is not your strategy. And in fact, there are really cool videos by Mr. Beast and PewDiePie you should go check out right now that are super entertaining, but they will not teach you anything. What I want to do is I want to talk to the people who are interested in thinking just a little bit differently about how you manage your money on a monthly basis to build wealth, to create additional streams of cash flow, and ultimately to build financial freedom in a record amount of time. What I'm talking about is using the shredmethod.com to build a bank of money that you can leverage into investments that create ongoing recurring revenue that ultimately create freedom. What I'm talking about is the pursuit of the mastery of money. And what I will tell you is it is a long-term pursuit. This is not for those that are looking to get rich quick, but those that are looking to do something different, a little out of the ordinary, for a short period of time, being 2 to 5 years, but that will turn your financial life around greater than you can possibly imagine right now. If you're interested in more information, check out theshredmethod.com and follow us at masteryofmoney.com. If you like this video, give a thumbs up, comment down below if you have questions. We'll continually create more content based on your questions, and I hope to see you on the other side of mastery.